Other way around. How you switch it? I want to be the opposite. No. Okay, remove this one. And then put it back. Remove. Add me. Put that one. Okay, no. Put me. Okay. I have no idea. There we go. All right. We're getting somewhere. Perfect. Okay. That is one. Let me make sure the other one is up. And we are going to get started. I realized that the slides didn't have, one of my slides were incomplete. So I had to go back and finish them because I was up to 12:30 last night until my laptop died, finishing these up. And then it died, and I said I'll finish them this morning. And of course, I forgot that one slide I had to finish. Okay, perfect. All right, so today we're going to go over, good morning. How's everybody doing today? For California, it is good morning. For Central Time, it is good afternoon. For East Coast, it is good afternoon. Yeah, it sure is. So for me, it is 10:04 a.m. And today we are going to talk about things they do not tell you about buying a car in your business name. So, there's a lot of talk lately, especially around this whole pandemic, about, all these new businesses that have popped up, especially with the business boom, about buying a car in your business name. A lot of people are talking about like the Section 179, being able to write off the whole price of the car on your taxes and all this other miscellaneous stuff. But I was looking at some of these gurus that's telling you this information, and they are actually leaving out a lot of information and not telling you some things. So then when you get to your tax preparer and it's time to do taxes, you're kind of thrown off. So then either your tax preparer is a side tax preparer. Someone just called me. Either your tax preparer is a side tax preparer and is going to do some things that she ain't supposed to or he ain't supposed to do, or they're going to explain to you, you're going to be disappointed because you're not going to get what you thought you were going to get. Okay. So let's talk about, this watch is going to drive me bananas. We're going to turn this off. Let's talk about, perfect, the things that they don't tell you about buying a car. Okay. So first and foremost, let's address Section 179 that everybody is talking about. Okay. So 179, Section 179 of the IRC, which is the Internal Revenue Code, allows businesses to take an immediate expense deduction. Business owners take this deduction pretty much for the purchase of depreciable or business equipment instead of capitalizing the assets. So when purchasing certain assets for your business use, you typically have the option to deduct it from your income or a percentage of the asset's depreciated costs over several years as well. With Section 179, an asset deduction, also referred to as the first year expense deduction, you may instead choose to deduct the asset's full cost in the year in which it's placed in business. So the option you choose obviously should depend on your particular tax situation. So I will always speak with a tax professional before making any changes, obligations, or any commitments to this, so you kind of know what's going on. So the IRS allows businesses to write off the entire cost. They do allow you to write off the entire cost of an eligible asset in the first year. Now, any asset written off under Section 179 must be used more than 50% in your business. And only the business percentage of it, there we go. Only the business percentage of it can actually be written off. So to qualify for Section 179 deduction for a business vehicle, it must be brought and put into service during the year in which you are applying for the deduction. Now, being placed in service means that a business asset is ready and available for specific use in the business. Okay. So which leads me to ball buster number one. Make sure I'm on the right ones over here. If your vehicle is used for personal use at all, you are not able to write off 100% as business use. So a lot of people, they just say, hey, you can buy this car, you can buy this G-Wagon, you can get this, that, and you can write off totally for your business. That is not true. If it is not used for 100% of your business, you cannot write off 100% of the cost. And honestly, if this vehicle is, in the eyes of the IRS, if this is your only vehicle, it will be seen as a personal vehicle that has business use. So keep that in mind as well, because they're going to say, okay, How do you get around? How do you pick up your kids? How do you go to the grocery store? You use this car, don't you? So you're using it for personal use. So it's also considered partially a personal vehicle. Now you can still get around. So you mean to tell me like on weekends that you're not using this vehicle if you're not working? And this your only vehicle, but it's 100% business? Yeah, they're gonna question the hell out of that. And I don't think you're gonna win that one. So the most important qualification for Section 179 deduction purposes is the business piece of it all. So you can only take a Section 179 deduction for vehicles used more than 50% time for the purpose. The vehicle is used for more than 50%, more than 50% of the time for business, okay? So the deduction is limited to the amount of use of the deduction and cannot be taken for personal use. So let's start here. You're often told, or actually told, to write it off, like I was just saying, that's the whole story. But you're told that you can write off 100% of the vehicle under your business. They don't tell you that it's only based on the amount that you use for business purposes. So let's dig a little bit deeper. If this vehicle is used at any time for personal use, you cannot deduct 100% of the cost. If this vehicle is used to do grocery shopping, hit up the mall, pick up your kids, drive to your 9 to 5 outside of your business, family, non-business related trips to Las Vegas or Florida, all that is considered personal, and therefore it is not 100% business use vehicle. Therefore, you cannot write it off as 100%. So which leads me to the next. When purchasing a vehicle for your business, did you know that the rates are actually higher for commercial vehicles? For personal loans, you can get an average interest rate of about 2.93% or maybe 3.5% or so, depending on your credit. The average commercial loan right now is about 7% to 10% or so. So take a look at this example that I came across in a group. This lady said, a couple of weeks ago, my personal car was stolen in Dallas and stripped for parts, and I was stressing about what I was going to do. Red flag. Then Tuesday, my payday score hit up, and finally, and I was like, this must be a sign to the dealership, okay, blah, 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 blah. Go down to the bottom here. It says 0 money down. Okay. 10% APR. It took about 2 hours at the dealership for a 2020 Dodge Charger GT. So red flag warnings. First of all, she said a couple of weeks ago her personal car was stolen. Indication that this vehicle will be used for personal use. 0 money down. That's good. But 10% APR? Yes, her APR for her vehicle was 10%. Let's break that down further so you can see how that looks. The average cost of a Dodge GT is about $31,895. So at about a 60-month term loan, and that's if she didn't stretch it out to 72, at a 10% interest, and I believe she was in Texas, so I'll put Texas, sales tax and other registration, her monthly payments are about $731.49 for a Dodge vehicle for 60 months. Now, if she took it from the personal side, at about 4.61%, the same 60 months or so, her payments would have only been $643.56. So $643.56 for 60 months with a total of only $38,613.53. That's the difference overall of $5,275 just to put the car in her business name. Do you know what I can do with $5,275? I mean, just to what? Dodge it being on your personal credit? Just to show face that you got a car in your business name? Just to say that, I don't get it. Because it's actually, if it's on your personal credit, it's actually a positive line. And if you default on the business line, they're going to come get the car. You may be liable at the end of the day, depending on what you put on paperwork, for the cost of that vehicle anyway. So it actually costs more to put in your vehicle in your business name than to put in your personal. Here's another one I want you to look at. This person says, I went to the dealership and I bought my first 2 cars for Turo. A 2018 Durango, $5,000 down. A 2016 Camaro, $5,000 down. I funded with down payments of personal credit cards of Navy Federal and PenFed rewards. Approved the Dodge Durango at $28K, 2018 for $28K, and an interest rate of 8% for a payment of $615. The Camaro at $48,000 with an interest rate of 13% for $1,117 per month. I did not have to PG both, but will report to my business credit primarily. That's great, but it's not great because you got a 2018 in the 2016. And I believe this post was written last year. So these cars are what, 2018, 19, 20, 21, about 3 and 5 years old. And you're paying $1,700 a month. Plus the 2 personal credit cards that you use, that's $10,000. Plus life and other obligations, plus insurance. All that just to put a car in your business name. See, some people don't look at the numbers and figures. They just figure I can get in my business name. That's good. That's cool. It's not my personal credit, but you got to look at the other side of it. A lot of times you're actually spending more money just by putting a vehicle in your business name, trying to dodge it. For what? A tax deduction? You don't have to put in your business name to get the tax deduction. We're going to get to that in a minute. So I think I broke down ball buster number 2. Commercial insurance for your vehicle actually costs more. So you've bought this vehicle, now you have to insure it, right? Okay, we drive around with no insurance. Did you know that commercial insurance rates were higher, or are higher actually, than personal insurance rates? And if your personal insurance finds out that it was a business vehicle and you didn't report it as such, that they can actually deny your coverage and cancel it, which means if you were in an accident and they found out after the fact, they could say, no, we're not covering this. Sorry. So the same thing, if you're using your car for a Turo, and you don't tell your personal insurance carrier, if the vehicle is involved in a Turo related accident or found on the Turo website, they can actually deny and cancel your insurance and coverage for that claim. You know, insurance company actually go onto the Turo website and look at not VIN numbers. I have a science attack for y'all. I'm talking to my nose, so please forgive me. They actually look at the license plate numbers where they're shown, and they look them up in their system to see if that's their people. That's how a lot of people get caught. And that is illegal. You cannot have a vehicle on Turo and be covering it under personal insurance. It would have to have coverage under the Turo or commercial insurance for that. Okay. Higher purchase prices also means higher replacement costs for the vehicle. The obvious in the event of a claim. Excuse me. So insurance rates are directly affected by the replacement cost of the car. So used cars are less expensive to purchase, obviously, and they are also less expensive to insure, obviously. Reasons for this is that the commercial insurance normally covers higher limits. Now, every business that uses a vehicle for work purposes should have a commercial auto insurance policy, especially if the vehicle is titled in your business name. So now on top of paying the extra money for the APR or insurance for everything, oh, they look up VIN number, thank you. On top of paying the extra insurance money for everything, not the insurance money, the car note, the extra APR, the interest, that's what I was looking for. You also have a higher insurance. So please keep in mind that personal auto insurance policies almost always exclude business use. So which means that even if you got a personal policy on it and again they find out you're driving it for business, they're not going to take care of it. That means you're not covered if you get into an accident while driving for work, with the exception of your commute, which really doesn't count. So be sure to check the fine print. And don't get too comfortable. Always check. I know nobody really reads the fine print these days. Even when you sign off on a credit card or get insurance or something, nobody reads the fine print. But guys, we got to start skipping over that fine print. It'd be some important stuff in there that we really be passing up. So in general, commercial auto insurance costs more than personal auto insurance. And that's because commercial policies, again, tend to have higher limits, okay? A personal auto policy usually covers about one person driving their own car and, of course, the car itself. But a commercial policy covers an entire business. So if you have multiple employees, it will cover all of them, or who all will be eligible to drive a company vehicle. So this can include multiple drivers, multiple vehicles, trucks, even employees with poor driving records. So that may also be a condition for employment, that you have to be able to pass have a good driving record. People do pull that, especially if you're driving for transportation, the buses, the MTA out here in California, or things of that nature. Commercial auto insurance doesn't have to be expensive, though. It really depends on the specifics of your business. A small business is where pretty much 1 or 2 people can drive a company vehicle, which more than likely will have lower premiums than a business having about 10 people or so, which will more than likely have higher premiums. And then there are also additional factors that affect the cost of the commercial car insurance, which is the industry risks, the type of vehicles you own, the number of vehicles, how often the vehicles are driven, the employee driving records, the policy limits that you choose, and also your auto insurance claim history. So if you've been getting into a lot of different accidents and things of that nature, more than likely your insurance is going to be higher. So There are some advantages of insuring your business vehicle in your personal name. The process is simpler, and the insurance should be cheaper, but you want to make sure again to check the fine print. But the disadvantages are potential liability insurance gap could cost more. The personal umbrella that you usually get for your insurance does not apply. And then if you're trying to actually separate your business expenses from your personal expenses, you just did the opposite. So something to think about that they really don't point out to you. They just say, buy the car. You can write off on your taxes. It's all going to be 100% tax free. There are so many loopholes, gray areas, and other things you got to jump through to make that happen. If you don't understand it, you can quickly and easily be misled. So, which leads me to ball buster number 3. Section 179 is not the only way to write off vehicles. There are additional deductions that you can take to help write off the cost of a vehicle. So let me introduce you to mileage, or the actual cost. So in terms of mileage, if you choose to track your miles, actually tracking your miles is actually the key. Okay. So if you choose to track your miles, you can track it in something like Mile IQ, QuickBooks, or you can even like keep a tag or a sheet where you're tracking your mileage throughout the day, the week, etc. And that you can easily keep with your record keeper for your bookkeeping. Bookkeepers will love you if you're tracking your miles correctly. Your tax person will love you if you're tracking your miles correctly. Okay. If you have a vehicle that is business related, you may receive tax deductions based on the number of miles that you've driven for that purpose. So I know in 2020, the tax write-off amount for miles was about 57.5% per mile. So at the end of the year, divide your total mileage by pretty much 57.5%. And that will let you know how much you can write off in mileage. So for example, if I drove, I'm just going to say 1,500 business miles that year at 57.5%, that's already $862.50 tax deduction that I can take on my taxes at that point. So depending on the type of business owner that you are, you may be driving a little bit more, you may be driving a little bit less, but that's the good factor, taking 1,500 miles, and that's already $862. So if you got to think about it from that perspective. However, if you are a realtor or an e-commerce business owner who purchased a vehicle for business purposes, it's going to differ. It's really depending on what you use that vehicle for and how much you drive that vehicle for business purposes. Now, let me introduce you to actual cost. The actual cost means that the costs associated with maintaining your vehicle, such as insurance, repairs, gas, etc. Let's say we lease the car that we bought for our business, okay? If that car is used for 50% personal, 50% business, we can actually receive tax deductions for the car payments, the tire changes, the oil changes, etc., up to the amount or percentage in which we're using it for business, okay? So common write-offs include interest on the vehicle loan, vehicle depreciation, registration fees and taxes, parking fees and tolls, garage rent, lease payments, insurance, gasoline, oil, maintenance. There are so many things that you can write off that they don't quite tell you. They just tell you to write off the whole car. Go ahead and get that G-Wagon. You can write it all up. So now again, if your business is only used for a percentage of the time, you can only write off a percentage of the vehicle. Okay. So let's back up to the section 179 real quick. This is ball buster number 4. And this was my favorite. Thank you. Thank you. Thank you very much. I try. I can't help people and do everything business one-on-one if I don't understand the stuff to explain to people. So thank you very much. Ball buster number 4. How are you going to write off a $150,000 car in your business has not made $150,000? You're probably saying, huh? Okay, let me break this down. So you use your 179, section 179 deduction to write off some of the G-Wagon, right? So that's about $25,900 to write off the G-Wagon. But if your business hasn't made that much, you can't write off that much. So this credit is only limited to your business's net income for the year. So you can't deduct more than you made. So if you haven't made $25,900 in your business, you can't write off $25,900 for section 179 of the vehicle. And then what's going to be another red flag is if you have this big old vehicle, $150,000 vehicle that you're trying to write off for a brand new business, and your business has not made any or hardly any money. You can't go too much in the negative without the IRS looking at you saying, why is your business so much in the negative? Just some red flags and things you want to think about. That's not it, but that is mostly majority of it. You can, if you only made $50,000 in your business and you take the 179 deduction, you only can write off up to obviously the $50,000 of your net income. And your net income obviously means the money that is made after you've taken off all the other expenses. So it's not included on top as an expense. It's actually taken off the bottom after everything else has been taken off. That's another thing they don't tell you. So it's not, if your business made $75,000 and your expenses and liabilities and everything was about $60,000, that means your business only made $15,000. So how can you write off $2,000 or $25,000 of Section 179 if your net income was only $15,000? You get that? So it comes off your net income. It does not come off the income that your business actually made. Okay. Now, all this great information and more, I done missed something, is being told because it is April and it is Financial Literacy Month. So because of April and Financial Literacy Month, I put together a bookkeeping toolkit. Now, this bookkeeping toolkit walks you through everything from how to do your bookkeeping to 4 different ways to do your bookkeeping. Yes, there are several ways to do your bookkeeping. And I've actually included all of the templates and all of the ways and all of the resources for all 4 of these methods, which include all 4 methods. So whether any documents that go along with it, any resources, they're all included. Things to look out for when doing your bookkeeping, 7 misunderstandings of bookkeeping. There are so many topics covered in this toolkit, which is normally $77, but today only you can get it for $27. So if you go to bit.ly bookkeeping toolkit, which is all lowercase, bit.ly bookkeeping toolkit, and use the code GWAGON. Yeah, I'm being sloppy. Use the code GWAGON. You can get the toolkit for only $27. 27, you can't beat that, because after today it's going back up to $77. And I also want to tell you what exactly was all included in this. Excuse me. Ooh, Jesus, my nose. I'm working through it. I'm about to go, and I can't find the medicine I need, so I'm like kind of screwed, which is the horrible part about it all. My mama has to go find me some medicine because it's only a particular kind that I can take. I'm special. Let me get to this toolkit because I did not put that piece in there for you. So what do you get with this toolkit? You will get information on 4 different methods that you can keep, that you can use to do your bookkeeping. Bookkeeping checklists to help you stay on top of everything. 4-step process to DIY your bookkeeping. 7 bookkeeping failures to avoid. 18 bookkeeping terms every entrepreneur needs to know. Now, I say this, and I say every entrepreneur because whether you DIY or outsource your bookkeeping, these are things you need to know. I understand that bookkeeping may not be a strong suit. Numbers may not be your thing. You may want to focus on your craft or whatever it is that you do and pass that on to somebody else. That's fine. But there's certain things about your books and your finances that you need to know so you can make sure everything is going okay. Look at the situation with Steve Harvey. Steve Harvey's accountant, how he thought the accountant, he was writing the checks. The accountant was supposed to be taking the checks and paying them to the IRS, and he wasn't. But he trusted the accountant to take care of the work. There are certain things you need to know what's happening in your books and understand so that when you're reviewing things and looking over, or they're giving you information about what's going on with your finances, you can call bullshit if it's bullshit. You need to know these things. It helps you to break down on paying yourself and paying contractors. 7 tips for better small business bookkeeping, and the top 5 bookkeeping skills all consultants and clients need to have, and so much more in this toolkit. There are over, I want to say 7, 8, 9, 10 different modules, I want to say, covering more than 10 different topics. Some of them have multiple topics in the modules. They're not long modules, so it's not you're gonna be sitting there for an hour watching one module. I don't do that. I don't do long modules because I have the attention span of a 5-year-old sometimes. So I teach the same way to make sure that you are grasping the information. You're not sitting too long. Even if I got to chop it up, I'll chop it up for you. So Do I have any questions? Any questions on any of the information that I have released? I'm going to go into, let me see. I don't have any questions on there. Let me check over here. I have to look on my phone because I have the two Facebooks, my Facebooks up on my phones. So, okay. No questions over here. I think they all came through on Facebook. Okay. Thank you guys so much for tuning in. Again, go to bit.ly underscore, no, not underscore, bit.ly / bookkeeping toolkit and use the code GWAGON to get the bookkeeping toolkit for only $27 today only. After today, it is going back up to $77. But this is for any business owner, any entrepreneur, whether you're new, whether you're trying to figure out this bookkeeping thing and figure out what's going on with your finances, you want to look into this bookkeeping toolkit. Okay, guys, I guarantee it's going to teach you some things that you do not know. And I also include 4 different methods for you to do your bookkeeping. So, and the resources for them. So whether you're doing paper, a system, whether you're doing, and I'll tell you actually, one of them is a planner. So I do have a monthly bookkeeping planner included in the bookkeeping toolkit. It's all part of it. So $27 for a planner when you pay what, 57, 67, and 99 for planners from these other places. You can just print them out monthly, and if it works for you, it works. If it doesn't, try another method. I've got 4 different methods for you to try, and I've got them all included there so you can try them out for yourself. Okay. Thank you guys so much for tuning in today. If you guys have any questions at all, please feel free to hit up my inbox. Please feel free to visit us at yourstarpowersolutions.com. I thank you guys for tuning in, and you guys have a great day. Bye-bye.